Happy Monday. We welcome you to Trading with Technical Indicators. My name is James Boyd. Today's date, October 27th. The next month, it could be snowing. Yes, you better buckle up because it's coming. I know here in Utah, it's getting a little chillier and it's soggy and wet and damp here. Now, some of you might be wondering, James, that red shirt is a bad omen. Okay, how do we start the class off with that? Well, I want you to kind of think about maybe like if we were in Spain and the matador was holding that little cape, right? Well, what color is the cape? That's red. And it's really, the matador really wants the bulls to charge. So now I want you to think about the red shirt just like that. I either had to sell the shirt or give it away to DI, whatever, or maybe just give it away in general. And so I was like, I got to wear the shirt. So I was given an ultimatum. So just real quick, as we get started, a little fun with you there. Rachel Dashwell is in the chat. We welcome her. We also like to welcome Dean, PR, China Favors, Kevin, Kelly, and many others. Welcome to all. Now, just real quick, we'll go over some of the things you're asking in the chat. If you have some questions, go ahead and ask those things in the chat. Rachel will be looking at that. I will be looking at that as well. Some of the things you asked, I was kind of planning on going over, but we'll hit as many things as possible. Today, as always, it's usually a fast-moving class. So many things to discuss, and so we'll get to those as soon as possible. Now, you can follow Rachel or myself on X. We do post educational content and announcements there. So my handle is @JamesBoydCS. Check it out. Check out Rachel's as well. Also, real quick as we get going, remember the information we discuss here today is done for informational purposes only. Should not be considered in the individualized recommendation. So some of the examples we do, there's variety to them. It doesn't mean you would consider all of those, okay, or any of them. You get to choose what you want to invest. That's the nice thing. Now, also just real quick is if we bring up options carry a high level of risk, not suitable for all investors. When we talk about, let's say, the paper money software application, understand we're using that for an educational purpose and we're trying to engage in simulated trading. The thing with that is there's not really any emotion or less emotion because it's not real. So there can be some differences between paper and real. And the biggest thing there is emotion. Now, also remember that investing involves risk, including loss of principal. Today, we'll talk about kind of some of the things we're seeing in the markets. Friday, Kevin and I talked about international markets, kind of compared to, let's say, domestic markets. Interesting follow through from that discussion. And we'll bring up let's talk about prices first, then we'll talk about indexes, sectors, and then we'll drill down into a couple stocks, okay? Now, last week, so first off, I was in the local mall here, and I walked by someone, and they said, hey, you're that Trend 3 guy. And he kind of chuckled when he said that. Just want to say back now, who's laughing now is what the paper money account is saying. So I think this is very important. I want to kind of point out something to you. Trend 3 is the price above the 10-period moving average, exponential, and the 30-day simple moving average. When we get the indexes, the sector, or the stocks in that Trend 3 condition. Now, the Trend 3 condition is just saying where it is at the moment. It doesn't guarantee where it's going to be at the end of the day, tomorrow, next week, and so on. It's just at the current state. And when we're in that state, we have momentum and trend. And when you have that condition, the paper money account balances tend to be at a high, okay, or near the highs, and you're riding trend and momentum. And that M word, momentum, very few people understand that, but it's the foundational concept of this portfolio that we're trying to ride momentum, and it's trying to stay not above a 20-period moving average. They're trying to get stocks above their 10-period moving average, okay? Now, just real quick, when we actually pull up, let's start with the SPX, okay? Now, if you look at the SPX, let's go back to where we were on Friday, okay? Because I don't want to act like this is completely different. If we look back to where we were on Friday we ended up the end of the week with a breakout. Now, how many times have we said new high, new high, new high, new high? Quite a few times. Now, those new highs, a new high is not bearish. It's a confirmation of uptrend. And so now remember, we also kind of said before is that sometimes when we talk about investing, it's also psychology, okay? A lot of times when people see new highs, they're kind of going against that because we've been conditioned in retail buying stuff. We always want something cheap and a discount, give me 10% off, give me 20% off. Well, in the world of investing, sometimes that's not necessarily the only strategy. Some investors are looking for something to actually hit a brand new high on purpose, okay? So we actually see a little gap to the upside. Boy, those futures last night were active, okay, in multiple different spaces. So now, by the way, when you see the SPX, that just tells us the broad market in general, okay, multiple different sectors, not just technology and things like that. We're seeing some broadness in the move, okay? Now, here we are in November, okay? What am I setting up for? Well, I want you to kind of think about, I spent the weekend kind of working on some things over the weekend. There was no weekend, it was a strong end. And I want us to kind of think about, where's the market year to date? Well, if we look at the market year to date and we said, where are we year to date return so far? And I want you to think about, where's your scorecard? Well, if we kind of think about this, now it doesn't matter if it's paper money, okay? You got to start somewhere. If we go back into the S&P and say, okay, from where we started to where we are, the S&P is up 16%. Where are you in that? Okay. Now we compare the paper money portfolio to the S&P because we don't just invest in tech stocks. We actually do a mixture of stocks, okay, from utilities, staples, all the way to tech and communications and discretionaries. So we use the S&P 500 as the benchmark. Now, if your goal might be I want to actually try to hit that return. You might want to try to do better than the return. For some investors, they say, James, I just want a positive return in general, okay? Now, the way that the investor gets 16% is they had to be fully invested. So when I pull this up, this is saying if you fully invested, you bought day one, here we are, 16% fully invested, okay? Now, if we take a look at, let's say, the NASDAQ just briefly, okay, we'll fast fire these, nothing really different, brand new high, okay? Now, when we do actually look at the NDX, let's write down a couple key points, okay? When you look at the NDX, of course, we would be talking about the IXT, the technology. We're talking about the index, then we're coming to the sector. When we come to the sector, of course, we're coming to the stocks, which, my gosh, okay, got a little push here. QCOM even getting in on it as well. We'll come to that in just a sec. But so we're saying the index, the sector, and an industry group in there as well. Now, if we come to the Dow Jones, is that coming along with us? Now, can you imagine if someone says, no, I've been sitting in cash, because tariff this, tariff that, tariff this, tariff that. Well, this is where you got to ask yourself, are you going to pay attention to what the market does or Joe and Jane down the street? And this is why technicians, they're like, la, 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 I can't hear anything. They're just trading what's on the chart. Now, I know you like to listen to what people have to say, but a technician is really, yeah, you can listen to different viewpoints, but it's really the chart that is really saying, how does the market interpret this? The market's actually been showing strength, okay? Now, when you look at the Dow, see the same thing. Russell, where are you at there? Well, we actually see it's not in a brand new high. Small caps lagging a little bit. I repeat the point. These mega caps, these large caps, those big ones that tend to have more liquidity and profitability, those are still the ones that are leading, okay? So when you look at the RUT, no one has to invest in that. We just use this as a proxy for risk taking. If these are actually going up, this is kind of at the extreme end of the branch, if you will, where investors are trying to chase returns. Now, the comment that was brought up by Dean. Can anybody remember back when we talked about when the VIX was high and we said, what's the statistical chances that the VIX can keep going up versus reverting to the mean? Remember when we had that conversation? I do. And remember we kind of said that when investors look to get in, they try to use shorter term fear, which can be caused by news. And that fear or news kind of tends to be like smoke that eventually dissipates. And here we are down at the VIX at 15. Another lesson. How many times do we have to see that? Now, the other thing we want to kind of point out is that Dean mentioned is I kind of talk about the yen quite a bit, and why has the paper money account been bullish on both fronts? When we look at the VIX, the volatility for the S&P 500, okay, it's been staying lower than not. When we've had spikes in the VIX, it's mean reverted back down quite quickly. Now, if you look at the international volatility, which we'll use the yen as the proxy, there hasn't been a whole lot of fear. By the way, Japan actually hit over 50,000. Okay, not like anyone was watching. I'm joking, but it did hit at over 50,000 last night. So when you kind of take a look at what the backdrop, right? The backdrop has been quite strong, and it's actually in the last 2 days, it's continued that push. Now, briefly, I want to kind of pull up a couple sectors. Now, let me ask you a quick question. Which sectors are you watching? Now, we just said technology, okay? If you get NASDAQ actually hitting a brand new high, there's two sectors. If we're saying the S&P, SPX, hit a brand new high, of course we would be saying technology. Of course we would be saying discretionaries. Of course we would. We would probably actually be saying with that, can anyone name one that we're missing here? Anything? Anything? Yeah, so when I say, let's say the tech there, we did that, we got the stocks, but I'm talking about a sector, okay? Yeah, so the biggest actually thing is we would be kind of saying here is really the communications, okay? The IXC. Now, by the way, if you actually bring up the dollars, I think it's dollar amount, IX, there you go, there it is. So that's the one we kind of said, hey, we're going to keep an eye on. So if the S&P is going up, usually these horses, okay, those are the ones that are usually trotting or galloping to the upside. Those are usually where there is growth, okay? Higher potential returns, greater risk, okay? But people chasing those returns. Now, if we kind of look down and said, okay, now, by the way, when we say communications, give me some communication stocks that you're watching. What are you watching? Talk to me here, okay? Now, as I'm kind of getting some answers back, we're going to go to MarketWatch. Let's go to Visualize for just, oh my gosh, greens are maybe the favorite color for some investors. Well, when we look at communications, there's not a huge list. If we're talking about the S&P 500, if someone said, I wasn't paying attention to Google, the investor wasn't paying attention in general. So the biggest thing is the biggest names, horses in the communication group is Google. Now, the second one is Meta. We said last week, hey, you might want to keep an eye on that. Could that be actually reversing? Let's take a quick look at these real quick before we look at some trade examples. Now, you look at Google here, doink, okay? Now, I know people are going to say, yeah, you got earnings coming in. Well, we know we have earnings coming in. We talked about that on Friday, and we actually said, hey, sometimes people speculate going into those earnings, and sometimes people will run those trades 2 to 3 days prior to those earnings and try to sell if they're going to sell or protect over the earnings or just risk it in general, okay? Now, the one that we'll pull up here just real quick is Meta, which actually did poke its nose, okay, over the resistance here today. That one has earnings coming up. So communications getting a little bit involved. Just real quick, when we actually take a look at others we're going to kind of make mention of, we'll bring up IXI. Now, how many of you think that maybe the industrial sector might get a push here? Any other takers on that? Is anyone actually thinking that maybe IXI, if I go back to a 3-year weekly chart, is this maybe kind of starting to build? Does this look like any pattern that is foundational to a bullish investor? My gosh, so this looks like, there's really one good pull there with a consolidation, a second pull there with slight consolidation, and there's multiple. 1, 2, 3. Triple bottom, did not break that support level, and a little push. And so far for the week, that's a brand new high for the week. Now, remember, yours truly, Kitty Cat, meow, has actually been pushing to the upside. Don't say we haven't talked about Kitty Cat. Caterpillar, really kind of trading more like a growth stock, okay? So now you got to ask yourself. Now, by the way, major point again. No one says the investor had to invest in a stock. They might just say, James, I'm going to buy the industry group. I'm going to buy or consider the sector. Okay, those are options too, okay? You go for the stock because you actually think, A, the stock might actually have a higher performance relative to the sector and or industry groups. So now, how do you know which one could do it? You don't. You take that risk, right? Or you consider it. Now, the biggest thing is I want to kind of also point out is the financials. Last one here before we look at the first trade example. They've been kind of on a little pullback. If you look at the financials, what do we really notice on those moving averages here? Okay, a little green right there, little green right there, little crossover. And what you're going to now notice is when we look at a couple of these stocks, I'll just pull up 2 or 3. We're seeing the little diagonal line of resistance being broken. Now, you'll also kind of notice before we actually had that, there was a little MACD divergence on the chart and a little, for some investors, they really like that tilted up W pattern. And if you get a tilted up W pattern below the resistance, chances are probably pretty high that it could break out. Now, what are some of those financial stocks that got a little push? Goldman Sachs, Doink. Now, again, these are not, you wouldn't have to run a search. I mean, you could just think about where's some major financial companies. The other one is anything that ends with an S. I'm joking, but it seems like that. Morgan Stanley, Doink. And then what you're now going to notice is on Hood. If you take a look at Hood, you're seeing that on, well, Goldman Sachs and Hood, kind of the same type of idea. Breakouts, crossover, they've made a shorter term a higher high. Could they actually pull back, make the higher low, right? That's what we're seeing. Now, so where I'm not saying is it's not just technology, discretionary communications. I think probably the one that maybe the investor might want to watch is probably IXI. I asterisk that because that one has not broken out yet. Okay. Now, the other one, okay, forgive me. Mitch actually says, hey, hello. Okay, Wells Fargo. Yeah, Wells Fargo, for example, you're seeing the same thing where it actually popped up on earnings, okay? Popped up on earnings, ran up, pulled back, ran up, pulled back, kind of had like an ascending triangle, if you will, and that stock kind of pointed to the upside. MACD staying above 0. So if the MACD can actually stay above 0, what's the likelihood of the price actually going to the upside? The answer is probably pretty high, okay? Now, can the weekly chart be supportive of that? Oh, sure. If on that weekly chart there was like a crossover, some of those intermediate to longer term investors might say, hey, look, on the intermediate to longer term, we're also seeing a breakout. So what's the moral of the story? My gosh, there's like everything, not everything, but there's a lot of things that kind of look bullish, okay? Now, are there any questions? Hi, back to you, Pose Oglio 83. Okay, now as far as you know, we had that fun discussion. I think it was with James L. We kind of had a good discussion regarding, you know, the CEO of Jamie Dimon actually thought that there was going to be a recession, things like that. He hasn't been right, but boy, his stock went up to a brand new high. So sometimes it's nice to be wrong to a degree and actually have a higher net worth, as Jamie Dimon does, if he has the stock, okay? Any questions before we actually look at some first examples? Any questions? Now, these were some of the ones that kind of I thought there's been some questions on. So the major, we kind of wrote down some of the points. Probably the biggest actually thing is when we take a look at this, keep an eye on communications, okay? Keep an eye on industrials, okay? And again, I'm going to say this. I know I said it before, but it doesn't mean that you heard it yet, okay? No one said you had to buy the stock. You might consider the sector and or industry group, okay? Now, I would say that also when you talk about a bullish move in the market, probably you're going to asterisk also as well in the asterisk as well with that, the discretionaries, okay? Now, if I went back to just real quick, the MarketWatch, and I said, hey, what type of stocks are in discretionaries? Now, remember, I posted about this yesterday. I think when people look at the list of the Dow, the NASDAQ 100, the S&P 100, that's an immediate list. I think investors might spend just too much time trying to find some secret hot sauce list, the stock of the day, and the stocks that might be going up might be in those 3 lists anyway, okay? Now, for me, why did I do that? Well, because I couldn't read the chart, because I didn't have some of the tools that I'm going to show you here in just a second. So I thought by looking at more searches, it never fixed my problem that I couldn't read the chart, okay? Now, the one that's kind of standing out is Tesla. And if you actually look at kind of what that looks like on the chart, what you're now going to notice is if you pull it up, let's start here for just a second. Now, I know many of you might say, James, some of these stocks are so close to earnings, I want to invest in stocks that are actually post earnings. You should say that because that's what I thought you might say. So let's start here. So this one has already kind of had earnings. It's about 3 days after earnings, and the stock is still above support. Now, when we talk about, you could talk about technical analysis all day long, but at the end of the day, you actually have to have a strategy that you want to do. You're going to buy the stock? You're going to do options? What are you going to do on it? Now, in this first example, let's start with the stock position. Some of us might be there. Fine. Now, what I'm going to do is if the investor said, James, I'm kind of seeing like maybe a potential support bounce. Now, notice on these charts. Now, when I got started, we didn't have this stuff, okay? If I look at that, we get a little CAHOLD dot. Then we actually get another little CAHOLD dot as well. So when we look at the lowest, most recent red candle, it was Friday. If today we trade above the high of the low day, close above the high of the low day, well, in this case, that's why there's a dot there, okay? So the dot is going to really show if it's a trade above the high of the low day or close above the close above the high of the low day. Now, if we take a look at this, what we're going to do on this is we're going to pull up the paper money count. And what we're going to do in this case is we're going to come to, now, in the margin account, we need to sell something because the account balance is negative. We said when we got started last year, in the week of Christmas, we're not going to trade on a negative balance. We're only going to trade what is actually in that portfolio. So I can't do the trade there, okay? I'm going to have to go to from the margin to the IRA account where there is some cash. Now, what I'm going to do is if I go to bring up Tesla, we're going to buy the shares of Tesla. We're going to right click on the chart. We're going to go buy custom. And what we're going to do in this case is go with OCO bracket. Now, just for the moment, let's say the investor says, look, I'm only going to invest. I don't want to say only because it can move quite a bit. I'm going to actually say we're going to do like a $5,000 investment. So if we click on these little icons right down here, we're just going to go to the dollar amount and put 5,000. That is the budget that we're going to use in this case if we did this. Now, it's now going to be really about 11 shares of stock. Okay, so 11 shares. Now, I'm going to tell you right now, it doesn't matter how high the market goes if you ain't in it. Okay. Now, I remember back in 2017, one of the funniest comments I've heard from a client was anyone can make money in this market. That couldn't be the farthest thing from the truth. You can get the market to go straight up and people are still sitting in cash, okay? Now, the biggest actually thing is we see this prior high. That high right there and this high right there, those are kind of maybe some shorter term resistance. Now, is that the Berlin Wall literally? Probably not. I mean, those are two highs at distance, a pretty good distance of date ranges. So someone might say, I'm not going to get in until I get above 470. I'm not really thinking that's a big level of resistance. Hasn't tested it that much. Now, in this case, we might kind of be thinking this is one of our favorite patterns. Doesn't mean it always works, but some investors might try to isolate by trying to find patterns where we had a prior high, where we actually fell down to a base of support, and then maybe where we ripped right back to the upside, and they might try to play the extension. Now, what I'm going to do is I'm going to use a 161 Fibonacci. Now, I'm going to put this target a little bit less than 600. I'm going to put like 598. Now, there's no, perfect math there. I just kind of like to set it 1 or 2% below the 161 because it's a target. Wonder if it falls short of the target a little bit. That's why I did that, okay? Now, what I'm going to do is go day to GTC, and I'm going to go day to GTC. So if someone said, what indicator are we actually using with this? Well, we're using a classic CAHOLD. Now, I'm going to just tell you the way it is, okay? A lot of times people think they got to come up with the indicator of the month program, the indicator of the week. What was wrong with the whole moving averages? What was wrong with the CAHOLD dot? What was wrong with the stock hitting a 20, 55-day high? Which one of those entries didn't show and the stock sometimes can have decent moves? I would be very careful on using 57 different indicators. There's a couple key indicators that we show that if it moves to the upside, those indicators are probably going to get triggered, okay? Now, if we take a look at this, and the indicator we're talking about so far is classic CAHOLD. Now, if you take a look at this, what you're now going to notice is I'm just going to move to 11 shares, 11. Now, on the downside, what you're now going to notice is, if you take a look at this, I'm going to put that stop underneath 420, okay? Now, if we did, let's say 420 less 2%, what you're now going to notice is we're going to set a stop at really 411.60, okay? So 411.60. Is everyone with me? 411.60. Now, James, I noticed that you kind of set wider stops. That's true. Why? Well, because I've learned from the past that you set tight stops, you have a greater chance of getting stomped out, you lock in the loss, and sometimes you just realize that, my gosh, the stock went right back to the upside. So what this will do is if you set wider stops, it's going to make it where you can buy less shares. So there's a trade-off. If you set tighter stops, you buy more shares. If you set wider stops, you can buy less shares because you're trying to account for what that potential max loss, well, not max loss, what the loss could be. And the key words we need to say is the potential loss. Why? Well, because it's a stop. And the stop is saying, in this case, sell the stock if it goes to that price, or, keyword, give it to me, or less. So that's the risk of setting a stop. It doesn't mean it's going to sell right at 411.60. It could feel lower than that. If they gap down and said Elon Musk is no longer with the company, oh, okay. Now that might be a negative. And that stock could gap down to 390, 380, and the fill could be a lot lower. Okay, so that there's always a pro and a con of everything. The pro is it is a trigger to sell. The con, we don't know what the price is going to be. We're going to send the order. Let's verify that. I'm just looking at that just really quick. That looks about right. Going to send it. Okay, now. The comment came in just real quick. If we go back to this, so that's why I kind of want to look at this, but I want to show you something, okay? If I go back to this chart, we said the 161 extension was, we said about 603, shed about 1% from the target. It's going to get us to 598, not 498, okay? Yeah, so Jack, you said target 598, maybe 498. Well, remember, if you set a lower target, you just want to have a greater chance actually getting there, okay? Doesn't mean it's going to hit either, but our target was really based upon a longer term. So if we said, what's the sweet spot of these trades? The answer is 2 to 3 days to 2 to 3 weeks. Now, if we set a movement up if we set a move like that, like 15% higher, how do we know it's going to go there? We don't, that might be something that takes longer than normal. That's what we're kind of expecting. Okay, but the sweet spot of kind of what we're looking for is 2 to 3 days to 2 to 3 weeks. Okay, now I also want to go back to just real quick another stock, and I want to probably the most interesting stock last week that I saw was IBM. Okay, IBM had an unbelievable gap down, and I just want to kind of just emphasize this point. When you see investors buying on negative, what's perceived to be negative news. Let's say the stock falls below support, okay? Gaps down or even closes down there. And the very next day or the next day after that, the stock gets back above old support, which should be new resistance. That's a strong bullish signal. Second, in this case, here we didn't even close down there. We just opened down there, but then we ripped back to the upside. So remember, we've talked about that quite a bit. When you see stocks below support and investors are buying, why on earth would they be buying unless they thought they had enough ammunition of capital to knock the price higher? And boy, did they ever. I don't know if you saw that, but that was probably the chart of the week last week. Another learning lesson of why do bulls buy below support, and it's because they already probably knew they wanted to get in. They're taking advantage of short-term price action, and they're just trying to establish and build dollar cost average on a position. Now, what I want to do just real quick is I want to take a look at a couple stocks that we'll just kind of take a peek at. Now, what you're now going to notice is Amazon. They have earnings coming up on the 30th, okay, coming up in about 3 days. That's a stock. If we're talking about discretionaries, of course, okay. Now, I don't know about your household, But I always tell my household, please, a good day for me would be that I don't get a package at the door, okay? It doesn't happen very often that there's nothing, okay? But it's just, now I'm not saying that it has to be from Amazon, just in general, okay? Now, the one I'm also going to kind of keep an eye on, speaking of the ticker A, is Apple. Now, Apple also has earnings on the 30th as well, okay? Now, I want to kind of touch on these two trades. Now, if we went back and said, James, you talked about indicators. Let's take a look at kind of some of the other indicators that we like to look at. Now, remember we said, and this is probably could be like a t-shirt idea, that hitting a new high is probably not a sign of bearishness. Now, on the second chart here, which I'll send you this link to in just a moment, this right here, if I look at that the orange dots, that's really a 10-day high. What you're now going to notice is on the blue line, what you're now going to see is that's a 20-day high. We've talked about that quite a bit, right? And then you look at the white line, take your guess. Yeah, that's the 55. And there she is. Now, if I pull up Apple and I scroll to the right, what you're now going to notice is lately, that stock over the last couple of days, there. That stock has been hitting that 10, 20, 55 period moving average quite a bit. Just recently, there, and there. Now, so why are the lines on top of each other? Well, because it's a high in all different durations of time. The 10, the 20, the 55. Now, this is an indicator. What's the indicator? Price high. Price high being the duration of time of 10, 20, 55. Now, if we take a look at this, we've got to talk strategy. If we're talking about strategy, well, some of you might be thinking, well, there's earnings coming up. We don't know what's going to happen. Now, the biggest thing with earnings coming up, we know that the V word, volatility, could be pretty high right here. This is like a balloon, right? There's an unknown earnings coming up as far as what the number is going to be, the reaction. Did they hit the forecasted number? Did they raise the guidance? Any new products or services? Any new changes in the fiscal year coming up, and so on. So when there's a lot of unknowns, there's a lot of pessimism, but also optimism, just unknowns. And the volatility goes up. And when the volatility goes up, the premiums go up. And you know exactly where we're going with this. When there's high premiums, the investor might consider perhaps a lower strike. Now, if you pick a lower strike, now what I'm going to do is I'm going to go to the 21st November with 25 days remaining. Now, if I look at, let's say, something like we normally talk about, like a delta 30 to 40 and so on. Remember, the delta 30-40 is just it's a twofold meaning, right? Statistically, the chances the stock will be 1 cent below the strike at expiration, but also it's the conversion factor. The stock moves up $1. How much is the option price theoretically moved by? So the stock goes up $1. The options move by approximately what the delta is. The key word is approximately. It's not the only factor. Now, let's say the investor said, James, I want to be a little bit more conservative, and I want to maybe sell. Now, by the way, I want you to notice this, and I want to kind of throw this out here. We don't normally do this, but we're going to bring this up here. So with 4 days remaining, look at the implied volatility, 48. Jeez. You look at next Friday, you're going to see that it drops all the way to 35. You look at 18 days out, it drops to 32. And what you're now going to notice is the one we're talking about, it drops down to 30. Now, if it was you, okay, and this was your paper money account, would you try to, for example, use the higher implied volatility, meaning selling something that was going to expire this week? Now, remember, you do this, there's not a whole lot of time to recover, okay? There could be a potential assignment risk. There could also be with this maybe a max loss that can't be avoided because you only have 4 days left. Now, the advantage to that, we said the cons, what's the advantage? The advantage is the puts and the calls, they're higher priced, okay? Now, we're talking about selling something. Now, in this case, let's say the investor said, James, I want to come down to maybe that 265 strike. Now, if you go shorter in days, there's less time. So if there's less time, there's a less premium. What we're going to show in this case is we're going to sell the 255, okay? We're going to sell the 255, and then what we're going to do is going to buy the 245. Now, we don't normally show examples of going this short term, but let's bring this up. Now, we're always kind of talking about bigger premiums, greater chance of the stock being, we're just trying to get maybe a higher ROR. We're talking about typically doing trades that have more than 20 days expiration. Does everyone trade like that? Of course not. That's why I'm showing you this. Now, some people, what they want to do is they want to say, hey, James, I want the time to be against the buyer. Okay, I want that actually kind of be almost it either closes above the 255 or it closes below. And I want to know as soon as possible what could happen. If we sell the 255, we're saying, hey, we're okay with buying the shares at 255. We talked about that last week. If you have to buy the shares or get assigned, does the investor have to hold on to the shares? They could review the liquidity. They could sell all the shares. They could sell some of the shares. They could sell none, okay? They're that person's shares. The investor who is thoroughly thinking this through would never sell any put unless they wanted the shares anyway, okay? Now, what I'm going to do is if you pull this up to, let's say, a $10 widespread, and again, this goes back to the question was last week is, why do people do this? Well, so what they're doing is they're trying to trade probability. If we pick a lower strike or lower delta, we're really saying, look, we want to have a greater chance of being right. With that greater chance of being right, the premium's less, but the strike that we're selling is 255 less $1.23, break even 253.77, max loss 877. Now again, when you look at that, that's like, the odds of actually the stock being below the 253.77, we could approximately see what those are. How? Well, we don't have a 253.77. The strike that we have closest to break even is 252.5. And if we look at this and said, well, what's the likelihood of the stock being below 252.5? The answer is 15%. So if it's 15% to be below it, it must be 85 to be above it. And some people do this. And you might run into them, okay? Especially at in-person events, okay? So we're going to show an example on Apple of over earnings trying to play the volatility, okay? Now, by Thursday, we won't know on the trend trading class, but I think it's worth to kind of bring it up and kind of show an example of a shorter term, higher probability, higher volatility trade, good learning lesson, okay? Now, what I'm going to do in this case is we sold the 255 or trying to sell it, and then the one that we're buying is the 245. There and there. The trade is not filled. The keyword is yet. Now, I also want to go back to just a couple stocks. I'm going to fast fire a couple stocks that we might keep an eye on. Now, by the way, I said that I would share with you this we call the chart package, or the charts in general. We call it the package. Why do you call it the package? We call it the package because this is really the package of charts that we like to kind of use. So like when we're looking at different indicators, the first chart is really the whole moving averages and CAHOLD. Just simple. The second chart is really just looking for stocks that are hitting highs, whether it's the 10, whether it's the 20, whether it's the 55, and so on, okay? If you get into this third chart, what you're now going to notice is underneath the moving averages, that third chart is really for using those lines below as stop adjustments, okay, and so on. That trend, this fifth chart is really showing what the trend is at the current state and time, and that's on the daily chart. So if we looked at this chart and said, hey, what type of trend do we actually have on the chart? Well, we know, okay, person in the mall didn't, maybe fully didn't comprehend, not yet. We're going to get them. Okay, a little fun there. The biggest actually thing is, now we're going to get them in terms of helping them understand when actually we get a green candle, that just means that the price is above both moving averages and the price isn't at resistance. Okay. Now, this one over here to the right, you're going to see this last one is, how many of you have ever said to yourself, well, I'm not going to get in because it's too high? And well, so the blue line is what you'd expect. It's the 10-period moving average. This yellow line, okay, so we could say things like, well, it's too high, it's too high. But this kind of puts like a ruler above and says, well, how high is it? Well, the yellow line is 3% above the 10-day moving average. Moral of the story, it's not very high if you really look at it in terms of an envelope. The red line is really the 5% above the 10-period moving average, getting higher. It's at the upper threshold of our trade examples. And the white line, if you said, hey, it's too high, yeah, you probably would say that because that's fair, because you're now 7% above. An example given like in a stock like QCOM, when you get stocks above 7% above a moving average, there can be more of an appetite to profit take because there's a greater chance that it could mean revert back down to since it popped on a news announcement. That does not mean the trend's over, okay? But when you see the stock go above that, it's like Bollinger Bands, okay? In a way. All right, yeah, now, so some of you like to kind of play games with me, and it does. It gets below my skin. You like to say, James, too high, knowing it's going to provoke just an emotional response from me. Okay, guilty as charged. We're going to go to setup at the top right, setup, open shared item. And if we click on that open shared item, all we got to do is copy and paste in there. It wasn't too bad. Setup, open shared item, copy and paste in. Click on preview. And now what you're going to see is if I just go preview and say import this, we're going to get a little package of charts here. And those packets of charts look like the one behind us. If I open this up, maximize that, things what we want to know is, first off is, how do I save it? Well, go right back up here to the boxes and just say save grid as. There you go. How do I bring up the chart individually? Well, going to go up to the three lines, and there she is. Maximize grid cell. And if we maximize grid cell, now if I do it again, click on the three lines on any of the boxes, maximize grid cell, it's going to maximize that chart. Now, what you're now going to notice is I can just say, hey, think of this like tools. I'm looking for bounces. I'm looking for breakouts. I'm actually looking for, let's say, I'm in the trade, and I'm actually looking, let's say, to have stop adjustments. And I'm actually looking to see what type of trend we have, and so on. Or how high are we above the moving averages? This is just like a plumber to having a hammer, a screwdriver, an impact wrench, whatever, tools that they're going to frequently use to do a potential job. And that's to assess, is it a potential example? Now, are there any questions? Okay. Yeah, so the comment was, can I send this? Now, this link that I just sent to you it's for the whole entire chart itself, the package of charts. There was a question regarding, can you send just this chart by itself? If that was what your question is, I sent to you that second link as well. It's just going to be this chart right here. The other question is, can you post the URL for these charts? I did. It's the first link that you actually see. The second link where it actually has DQ at the end, DQ, like Dairy Queen, it actually is for this chart only. All right. Now, a couple charts that we're going to keep our eyes on, okay? One of the charts we're going to kind of keep our eyes on, and so let's kind of do a 2-minute hustle here, is we're going to kind of keep our eyes on, let's say, Google, which has had a good push, but that doesn't mean it can't really make a higher low. That's going to be one that now, many of you will probably watch that. We did the example of Tesla. That is one that's kind of right up against resistance. Could that be an extension? We're going to keep our eyes on that. The other one we're going to kind of keep an eye on is, what's the reaction on earnings for Meta? Meta is kind of setting up for the week. Could it try to go back to the top of the channel? Going to keep our eyes on it. The other one we're going to kind of keep an eye on that's kind of more in line with today with no earnings is Avgo. Avgo, red candle. Now remember, red candles could actually be, they could be hammers. They could, the hammers could be green or red. If you think we're hammering off support and this resistance might not hold, keep an eye on Avgo, Broadcom, okay? That's the one that's kind of been in the channel, and could it break to the top side? We've gone for a long period of time in the channel. Could it push? And we already said hood. The other one I'm going to kind of say in closing here, last one, is also Zscaler. Zscaler broke out on Friday. It's not unusual to see a red candle on that second day. Can you get a higher low there? So a foundational concept of technical analysis or technical indicators is some of these tools we talked about here today that are kind of the main charts we use on a week in, week out basis. Okay. So I'm out of my time here today. Did some couple trade examples. Also kind of got us some stocks that maybe the investor might kind of keep an eye on. And so with that said, stay tuned for Cameron May coming up at the top of the hour. Thank you, Rachel, for answering those questions in chat. Now remember, if you have not subscribed to the Trader Talks channel, make sure that you do so right on YouTube. Now, also quick reminder that you can follow Rachel or myself on X, okay? And also remember that you can subscribe for free right on YouTube. Also, click the thumbs up if you like today's session. That way others can find it as well on YouTube. Now, also remember with what we discussed, it was done for example, illustrative purposes only. Remember that all investing involves risk. Just because it's going up today doesn't mean it'll do that tomorrow or the next day, but the investor's trying to trade probability and trend. With that said, thanks so much. Stay tuned for Cameron May coming up next. Take care. Bye-bye.